Hey, what's up everybody? I'm Jason and you're watching my channel Micro Investor. So in this video, I want to talk to you guys about AirBnB, ticker symbol ABNB, because they just had their IPO today and there's actually not a whole lot to really show you on the graph. That is because this stock came out available to retail investors already up 100%. Now I think Airbnb is a very exciting stock and I'm actually also interested in investing into this stock, but am I interested in investing into it at these prices? That's what I want to talk about in this video. So as we get into this, if you guys don't mind, do me a huge favor and please be sure to smash, destroy, and annihilate that like button because that helps me out with the YouTube algorithm and helps spread this video to more people that might find it interesting. And subscribe if you have not already. And if you want to help out this channel even more, I do have a Patreon with a new private Discord chat. Link is in the description. Now let's get to it. So Airbnb's IPO was set at an offering price of $68 a share, which obviously that's not the price that it came out to us retail investors, as institutional investors are the first to have dibs on any IPO before it becomes available to everybody else. So what happens in this case, and also what we just recently saw with DoorDash, is that the institutional investors buy up a lot of shares, and then eventually at some point in the day that stock then comes out on the market to the retail investors. By this time the stock price is already highly inflated because so many shares have already been purchased. So for me, as somebody that is looking to buy Airbnb stock early as the stock just comes on the market, I have to ask myself, do I want to buy Airbnb for more than 100% premium on the price of the stock that they were offering their shares for when they first came out on the market the first day? Or do I want to wait for a better buying opportunity? Because here's the thing, here's what happens with these IPOs, and I'll show you first with what happened to DoorDash that just came out on the market the day before. As DoorDash spent the entire second day in the red, at some points being down more than 7%. Now a couple months ago, Snowflake had their IPO, and the gray line that's connecting to the green line is the entry point from when retail investors were able to buy the stock. That's when it came out on the market available for Robinhood. And as you can see, because the price was so inflated by institutional investors buying up their shares, there was so much pullback that happened with Snowflake, and it's been a while under that line, not going above the price that was available for retail investors. So everybody that got into Snowflake on that day that was a retail investor, they were kind of left holding the bag for a while. Now luckily that stock has been trending up. But to look at one of DoorDash's competitors, let's look at Uber, who had their IPO in May of 2019. And as you can see, it spent the majority of the time this stock has been publicly traded below the price that it came out on the market to retail investors. Now, luckily, Uber is starting to pay off for everybody that has held onto the stock for the long term. But sadly, the same thing cannot be said about Lyft, who had their IPO in March of 2019, and that stock price has never gone above what it was available to retail investors on the date of the IPO. So with these examples, where I'm at basically right now with Airbnb is I want to invest in the stock, but I want to make sure that I'm buying it where I can chase the upswing, where I can hit that home run. Because right now Airbnb, that stock came out on the market with it already hitting a home run. Everybody that was an institutional investor, they already made big bucks on that stock. And I'm probably going to hold off for a while actually before investing into Airbnb, because there is also another reason besides that there is going to be a bit of pullback just from the institutional investors buying so many shares, and that is because of what's going on right now with the world, with the pandemic, that has been affecting the whole travel industry in general. Now I have this article here from CNBC to read you. Airbnb made $219 million in net income on revenues of $1.34 billion last quarter. That was down nearly 19% from $1.65 billion in revenue a year prior. Despite primarily turning net losses, the company has had other occasional quarters of profitability, including the second quarter and third quarters of 2018 and the third quarter of 2019. For the full year in 2019, the company reported a net loss of $674 million on revenues of $4.81 billion. Thus far in 2020, The company has turned a net loss of nearly $697 million on revenues of $2.52 billion. The decline is likely from the impacts of the COVID pandemic, which puts the brakes on leisure and business travel earlier this year. The pandemic has cost the travel industry an estimated $481 billion in lost revenue since the beginning of March, according to a December 3rd report from the U.S. Travel Association. In April, shortly after the pandemic hit the U.S., the company raised $2 billion in new debt funding at a valuation of $18 billion and announced major cost-cutting initiatives, including plans to lay off 25% of its staff, or nearly 1,900 employees. The company also slashed marketing costs and raised billions of dollars in debt. Airbnb rebounded, however, after a surge of rentals in rural areas. As residents with means fled shuttered cities, the rebound began within 2 months of the pandemic, the company said in its prospectus. The big key takeaway here is that in April, just right at the beginning of the pandemic, no idea when the pandemic was going to recover, when things were going to be back to normal, and the valuation was $18 billion at that time. Yet, here later on towards the end of 2020, and we still have no idea when the pandemic is going to recover, and we're just going into a second wave. California shut down, and they just came out on the market with a valuation of $48 billion. So in my opinion right now, there's just way too much future priced into this stock, and we can't predict what's going to be happening with everything that is going on. I think as more revenues start coming in, we're going to start saying, hey, this is way too high of a price, and we're going to start seeing that thing drop down quite a bit. That's just my opinion, but that's my strategy, and that's what I'm going with. But I think a better buying opportunity is not going to be anytime in 2020. It's going to be some point probably within the first, towards the end of the first quarter of 2021. Anyways, I'd like to hear everybody's thoughts about this. So please let me know in the comments section. Please like, share, comment, and subscribe. New videos coming out on my channel all the time. Thank you guys for watching. I will see you all in the next video coming very soon. Thanks for watching.